Hello, my name is Pierre Ortlieb. I'm an economist at OMFIF, and I'm speaking to you today from the offices of the World Gold Council. I'm joined today by two eminent speakers. To my right I have Dr. Tatiana Fic, the director of the Central Bank and Public Policy team at the World Gold Council, and Professor Michael Kitson, an economist at Cambridge's Judge Business School. Today we'll be speaking about the gold market, recent developments therein, and especially the role of central banks and the Chinese economy in stimulating and driving that market. Thank you both for joining me today.
Hello.
Thank you.
So I think I'd quite like you to discuss the main drivers in the gold market as of late, as of the past sort of 5 to 10 years. What's been going on and what has been the role of central banks?
Sure. Central banks have been net buyers of gold since the global financial crisis over the last 10 years. And on average, every year they've been purchasing about 500, 600 tons of gold. Last year, central banks bought 651 tons, an absolute record, more than any time since the end of the Bretton Woods system and the suspension of the US dollar convertibility into gold in 1971, nearly 50 years ago. There have been several factors driving the strong recent central bank gold demand. First, some of the central banks have been purchasing gold for rebalancing, to rebalance their reserves. Total reserves of central banks have been growing, and to keep the share of gold at the same level, central banks have been adding gold to their reserves. For example, the National Bank of Poland cited the growth in the international reserves as one of the key determinants behind its recent purchase of gold. So that's the first factor. The second factor is the macroeconomic uncertainty. The macroeconomic uncertainty has increased globally. You have deteriorating budget positions across countries. Debt levels are rising. Interest rates are either very low or negative. And in this environment, gold provides a good alternative. Earlier this year, we conducted our central bank survey, according to which central banks take into account mainly the gold's lack of default and gold's long-term store of value properties as one of the key factors behind their gold investment. The third factor is the geopolitical uncertainty and geopolitical risks, with some of the central banks at the same time reducing their exposure to the US dollar. The de-dollarization that's been happening in case of some of the countries has been happening relatively quickly. One of the examples is Russia, that decided to sell most of its US Treasury holdings, and at the same time, as you know, Russia has been one of the largest purchasers of gold over the last 10 years. And finally, and I think that's what's most interesting, is that central banks have been buying gold also to hedge against structural changes in the international monetary system. If you look at who has been buying recently, the majority of central bank gold purchases have been coming from countries in Southeast Asia, in countries in Central Asia, countries with strong links to China, either via trade or investment links, especially along the One Belt, One Road route. And at the moment, the economic exposure of these countries to China is much higher than their share of the renminbi in their reserves. So, and since the renminbi is not fully convertible yet, the renminbi market is not fully open yet, so central banks have been purchasing gold instead.
So if you would allow me to summarize very quickly, so there's the macroeconomic uncertainty as well as the absolute growth in the size of foreign exchange reserves, but then also this concern around structural changes, around a rebalancing in the reserve currency system. I think those are the three main pillars, including geopolitical uncertainty, which kind of factors into all of those. So you mentioned the One Belt, One Road system. Obviously, China's huge geopolitical and geoeconomic, if you will, endeavor. What's the rationale behind countries along the Belt and Road buying gold? Is it geopolitical? Are they sort of afraid of backlash from the U.S.? Is it purely financial? Because there has been a lot of talk about the Belt and Road being an instrument for the internationalization of the renminbi that hasn't been entirely successful, and yet still there have been substantial gold purchases. What's been the driving variable there?
Sure, I think the main driver there is the economic exposure and the economic links between these countries and China. So as I mentioned earlier, China is the largest trading partner for most of these countries. It's also the largest provider of FDIs, especially infrastructure FDIs. And this implies that the exposure of these countries, but also dependence of these countries on China has been growing. And naturally, over the long run, the share of the renminbi in these countries' reserves would grow. But since the renminbi is not that accessible yet, central banks have been buying gold instead already exiting the US dollar.
Interesting. Michael, you're an expert of sorts on renminbi internationalization. I was wondering if you could walk us through recent developments in that space. Obviously, it's been much talked about. It's captured the imagination, I think, of people who are frustrated with the current reserve currency system. But as Tatiana mentioned, there are concerns around convertibility, things like that. Why don't you sketch the recent developments in that space?
I think we should look longer term here rather than just the recent developments and think about the long-term trajectory and the path. I mean, you're quite correct. I mean, the RMB is not fully convertible yet. But if we look at the long-term trajectory of the world economy, the world is shifting from west to east. The biggest economy now in PPP terms, purchasing power parity terms, is China. You often hear people talking about the US being the biggest economy and China being number two, and that's in market prices. If we're looking at in purchasing power parity terms, China is the biggest economy. So we're seeing that balance shift. The potential long-term growth rate of China is much higher than the US and the West. So the Chinese economy is going to carry on growing. It's going to be a bumpy road, but it's going to carry on growing. So we're going to see China being the balance shifting from west to east. And the world economy being reorientated in that direction. And part of that will be we'll see shifts in the international monetary system. So we will see, I think in the longer term, the RMB being more internationalized than it is at the moment and becoming more important as a reserve currency. We're likely to move from a dollar-based system to a multi-currency based system. The euro may be playing a role there, but the RMB will be playing a role and the dollar will be playing a diminishing role. We've seen this in history before. We've seen it with the sterling being the dominant currency, and after the Second World War, the US dollar became the dominant currency, and now we're seeing the relative decline, not the absolute decline, the relative decline of the US. So rather than just think about the short-term bumpy movement, I think we've got to look at the longer-term path. And China's continued growth will see the RMB becoming more important internationally.
Yeah. So you brought up the comparison with the US. For all its flaws, as an investor, if I were allocating my foreign exchange reserves, I think I would still prefer the treasury market to the limited access I can get to Chinese capital markets. What makes you think that that's likely to change over the long term?
I think I totally agree with you in the short term, but I'm looking at the longer term. I know Keynes said in the long term we're all dead, but sometimes we need to look at the longer term. And you're quite correct at the moment. What you need for a reserve currency, you need economic clout. and which China definitely has as the largest economy in the world. But it doesn't have completely open and transparent and deep capital markets yet. But I think that will be developing as the Chinese economy grows, as it becomes more open. And arguably, the most globally orientated country, dominant country in the world now is China compared to the USA. The USA is becoming inward looking, really focusing on making America great again. That may be a short-term phenomenon, but as the Belt and Road Initiative shows, China is thinking about international expansion. So yes, in the short run, you may say that there are still concerns about China, particularly its lack of transparency and its openness. But I think those things will be changing when we're looking 10, 15, 20 years ahead.
Do you think, another concern that investors I know would have is around the reliability of the national legal framework. Is that something that you envision would change as well? Is that something that you see changing in a significant manner?
I think that this will change again in the longer run, because China has to be open to foreign direct investment. And it is difficult now entering the Chinese market and the Chinese economy. But I think these challenges will unravel in the longer term. So I'm not denying there are major challenges now with China, but and it's going to be a bumpy route forward. But if we're looking, we've got to look 10, 20 years ahead. And we're going to have sustained growth, I think, in China over that period. And there will be changes in terms of the Chinese economy and more sophistication and more deepness in terms of its capital markets.
Just the final question before we link this back to the gold market. We've talked a lot about the constraints for investors in investing in China. But my final question, I suppose, is China ready to bear the burden of being a reserve currency? You know, it comes with significant costs, as the U.S. knows. Do you think that China and its governing authorities are willing to bear that burden at this point?
I think, from China's perspective, in the longer term, yes. But again, you hear lots of announcements from China saying it doesn't really want to be a reserve currency, and it's trying to dampen this speculation down. Because there are costs, and the costs may include appreciation of the exchange rate, of course. Yeah. But again, we're thinking the longer term, again. Yeah. I think I'm talking 10, 15, 20 years ahead. It's going to grow in importance, and it will grow. It is an international reserve currency now, but of limited significance, but it will become more important over that period. Yeah.
So, as you've outlined, we are likely heading to a world where the dollar experiences a relative decline from its current preeminence, one in which China plays a greater role and one in which gold as well plays a greater role. How do you envision the role of gold in that kind of multipolar, multi-currency reserve system? People talk about gold as a safe haven in times of uncertainty, gold as a transitional asset. What are your thoughts on this?
As the international monetary system changes, gold may help central banks and institutional investors as well to navigate through this transition from a unipolar to a multipolar international monetary system. First, because gold can serve as a hedge against crisis. And as Michael mentioned earlier, the transition to the multi-currency system may be bumpy. There may be financial crisis, there may be currency crisis happening on the way. And gold is a good hedge against such shocks. Second, although the renminbi is not fully convertible yet, the transformation of the international monetary system has already started, and central banks have started adjusting their reserves. And finally, if you look at what will happen in 10, 15 years, again referring to what Michael said, and what will happen in, how will the international monetary system look in 15, 20 years, it is likely that as the shift to the multi-currency system progresses, we'll see the role of the US dollar declining, at least relative to the other reserve currencies. And this would imply that over the long run, the dollar would depreciate in relative terms with regard to the other reserve currencies. And since gold is negatively correlated with the dollar, it's a very good hedge against this long-term dollar weakening.
Sure. And once this transitional period has expired, I mean, we can't really gaze into our crystal balls and know what it will look like, but what do you envision the role of gold would be in a kind of long-term future where there is, broadly speaking, an equilibrium between different reserve currencies like the renminbi, the dollar, the euro, and so on?
So under the multi-currency system, you'd probably see the role of gold at a higher level than it is now in a multi-currency system where not only the dollar but also the euro and the renminbi are playing the role of the major reserve currencies. At the moment, the share of gold in total reserves is about 10%. It is likely to increase over the next years because of all these factors that we've discussed. So I would imagine that over the next couple of decades, you would be seeing the role of gold closer to 15% rather than lower than 10%.
Interesting.
It is important to emphasize that there's a lot of uncertainty here. I mean, as you stressed, Pierre. I mean, a lot of uncertainty about the path of moving to a multi-currency world. And we've never really had that transition before. When the transition from sterling to dollar took a long period, and there's a lot of instability in the interwar period. So it's interesting. You talk about the notion of an equilibrium. That may be a long time before we actually reach that equilibrium. There may be a lot of maybe a very unstable equilibrium, particularly if you have perhaps three or four dominant currencies. We don't quite know what it will look like, but it may be a very unstable path, and we may not get to a period of actually some notion of a stable equilibrium in the long run.
Would it be fair to argue that the international monetary system tends to stability, however, given that it is very advantageous to use a single reserve currency in cross-border payments, trade invoicing, things like that? Is an unstable international currency system a workable environment for exporters, for international finance?
It's not desirable, but I think instability is quite common, really, in terms of the international monetary system. And certainly long periods of instability where you transition from perhaps one currency being dominant to another or a portfolio of currencies. That period can be a long period of instability. I mean, arguably, the period of greatest stability was the Bretton Woods system. And many would argue once that unraveled in the 1970s, we've been living in different phases of instability. I mean, I wouldn't call now a position of equilibrium. Certainly not a particularly pleasant or stable equilibrium. So I just think the path forward may be very bumpy and very rocky, and that may also have an important implication for the role of gold in that long transition period. Certainly.
Tatiana, Michael, do you have any closing thoughts on the future role of the renminbi and gold in that equilibrium or disequilibrium, as we've called it?
I'll just mention, sorry, Tatiana, I'll just mention that I think it's very important to recognise the shifting balance of economic activity from west to east. Again, we have issues about China and some of the Chinese policies, but that's where long-term economic growth is going to be the rapid. It's going to be in much of it in Asia, particularly in China, also in India as well. So we're seeing a rebalancing of the world economic activity, and the international monetary system will follow that. It may be with a long lag, and it may be a bumpy route, but I think it will follow that adjustment path as the world shifts from west to east.
I would add that this transition and these structural changes in the international monetary system, they bring uncertainty with themselves, and gold in this context is a safe haven, is a hedge, and that's why central banks have been purchasing gold recently, and they are likely to continue purchasing gold.
Thank you very much, both. Thank you for sharing your thoughts on gold and the future of the international monetary system. It's been a pleasure speaking to you both. Thank you for your time.